What's going on, everybody? It's your boy James, and today we're going to be discussing about the current interest rate in the market right now. We have interesting news, which is interest rate has been going down, and we're going to look at what is the current interest rate and how would that affect the market rate and how would that affect the housing market. Okay, so let's get to it. Let's go ahead and check it out. All right. So let's do a screen share real quick and show you what I'm seeing. Okay. So right now, if you guys don't know, interest rate is based on the the 10-year treasury. Okay. So right now we're looking at the 10-year treasury, and as you can see, within the last 6 months, interest rate, the 10-year treasury has been going down. Okay. And as we continue to keep going down, we'll see that within the last year, it's pulling back. Okay, so when would be a good time to refinance? Well, a good time to refinance is when it's a whatever your interest rate is currently right now. If it's 1% lower, then it's worth it. Okay, so let's look at pre-COVID. So this is during COVID. So the 10-year treasury will be probably pre-COVID number. It'll probably hit 2019 number, which is 0.5% lower. Okay, so this is what 0.5% would look like. It will probably for 2020. I would say for 2023, I do forecast that interest rate will be the 10-year treasury will be around 2.6. Okay, we just don't know, but the data looks like it'll probably be 2.6, 2.7. Okay, that's around 0.7% cheaper. Okay, so let's go ahead and check out Loan Factory. All right, so I just pretty much, depending on who your lender is, one way that you guys can save a ton of money when it comes to buying is to have a really good lender. Okay, how much they charge in rates, how much they charge in points, and how much they charge in fees. Okay, all these other fees that you guys do not know about. All right, so let's go ahead and figure out. Let's get a quick estimate from Loan Factory. And Loan Factory, they're a wholesaler. So, and the reason why I'm using this is because they'll give me pretty accurate interest rate data, right, on what they're charging. Okay, so let's just say I'm looking to buy a house for 550,000. Okay, normally, I advise our client to put between 5 to 10% down. 10% is a good number. If you don't want PMI, then put 20% down. So I'm just gonna advise you guys just to buy around, just put 10% down. Okay, for right now, for this particular instance. All right, so 50 grand down, and zip code. Okay, I'm gonna make a purchase, and I'm gonna put the zip code 93720. All right, FICO score. Okay, so most people that we know have an FICO score, and their interest rate is around 720 to 740. Okay, depending on how well you manage your credit, there's probably like a 3 to 4% of people out there that we know that have an 800 credit score and higher. But let's go ahead for this particular instance. Let's just use 740 to 759. We're going to use single family. We're going to occupy because we're a first time home buyer. And yeah, we're going to do a conventional loan. Let's go ahead and refresh the rate and see what is the current market rate is right now. Guys, there's a couple of things that affect the market. All right, and interest rate, the reason why we follow interest rate is because there's a couple of things. Okay, interest rate is important because we can, it makes money borrowing cheaper, it stimulates the economy, it does all this fun stuff that you guys don't know. Everything is affected by interest rate. Okay, stock market, housing market, and everything. Okay, so as interest rate goes down, a lot of assets goes up. Okay, all right, so let's go ahead and look at this. So currently right now, if we look at this number. Okay, and if you guys are in the market looking to buy, don't forget to ask your lender how much their interest rate is, how much their buying down points are, and all that fun stuff. Okay, so I want to show you guys what all this stuff mean. Okay, for 5% rate, lender points, right? That means you're paying these people $8,750 to get a 5% rate. Okay, the green means that the the lender are paying you. Okay, so if you look at if you choose this middle one, which is 5.375%, the lender are paying you $6,250. Okay, and then your mortgage insurance right here. It looks like you can choose this one or this one. This one's $100 a month less. Okay, and the current, and then you just pretty much, which is the monthly mortgage insurance. All right. Now, if you have a higher credit score, this thing would change. Like this thing would change. Okay, and also it depends on how much you put down. Right. So a couple of factors, right? Your interest rate is determined by how much you put down, okay, your credit score, all right, and also the 10-year treasury. And then one more thing, which is the supply and the demand of the mortgage industry as a whole, right? How many people are borrowing and buying and all that stuff. I want to let you guys know that, just because if you guys are following the 10-year treasury, just because if the 10-year treasury hit like say 0.5 and it, during that COVID time when a lot of people are trying to refinance and even us trying to refinance, right? For example, when we got a quote from some of our lenders, we didn't get these rate terms, right? Normally it's about 2%, right? It's about 2% higher than the 10-year treasury. If you go to a traditional lender, they'll charge you between 2 to 3% higher than the 10-year treasury, right? Depending on who you go to. So during this time, let's just say during COVID, we got a quote from one of our lender who was charging us around 3.2%. If we were to go to Loan Factory, they would have charged us 2.2%, okay? So anyways, I want to give you guys that insight, all right? But interest rate has been dropping pretty hard, and that's gonna be really good for buyers. People are buying, guys. So this is the new year, guys. People are coming into the market. Tax season is coming up. If you guys, okay, so this is one of the strategy that we use to help you guys save a ton of money is to get a quote from a wholesale lender, right? Like, for example, like Loan Factory, right? Rocket Mortgage, okay? A lot of real estate agents, they'll probably let you know that like, hey, don't use, you want to use a local lender. But that's not true because you don't really need a local lender if you know what you're doing. All right, if you work with an experienced real estate agent, they'll help shop around for the best deal and everything for you guys. All right. And the beautiful thing, okay, is that we can use this, right, pre-approval with a lock-in rate to negotiate the builder to match, right? So like for example, if you go through the builder and sometimes they offer $15,000, $20,000, $30,000 credit for closing costs, what we do is a lot of times we use Loan Factory to ask them, look, we have a really good rate right now with our current lender. Can you match? If you do, then we'll use you. If you don't, then we'll just go with our lender, right? This will save you thousands and thousands and thousands of dollars when it comes to buying. So anyways, hopefully you guys like this stuff. Let me know if you guys are currently looking to buy. There's a couple things that will help you guys out in your buying journey, okay? Low interest rate will cause a lot of money being borrowed that's cheap. It will make more refinancing home. It makes more cash available in the marketplace. All right. So, anyways, this is James with the Pham Real Estate Group. If you guys like this type of stuff, don't forget to like and subscribe. If you guys are in the market looking to buy, looking to save thousands of dollars when it comes to buying, let us know. We can help. Anyways, James with the Pham Real Estate Group signing out. Peace and love, guys. Peace and love.